This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now here on Market Talk to take a look at how the week in the trade wrapped up with Friday's session, we welcome in our good buddy Ted Seifried with Zaner Ag Hedge. Ted, hey man, how are you today?
Doing great, Jesse. Thanks for having me.
Appreciate you joining us, Ted. All right, instill some knowledge on me here, buddy. I feel like that this week I've been like a broken record talking about the same like 4 or 5 things. One day it's one thing, the next day it's another thing. It's just kind of just back and forth, this ebb and flow with the news headlines. Friday, it felt like commodities got a little bit of support. Crude was going higher, stock market under pressure. I mean, just talk to me about this market trade this week, because just overall, it just feels like it's just kind of been this ebb and flow back and forth, and we haven't really done a whole lot, I guess, in the grand scheme.
Yeah, very flighty, right? And so, Jesse, what we're doing here is we're kind of bookending 2 big reports, and this is the week in between. You know, last week was quarterly grain stocks and wheat production. We had some big shockers on that report, so we traded that. And then next week we've got the WASDE report, World Agricultural Supply and Demand Estimates. And there's going to be a lot of changes because we know the beginning stocks are going to change. So what does that mean? What are they going to do on the demand side of the equation? This is going to be the final look or really the last time we have any major changes on yield, if there are any major changes on yield between now and January. So this is probably the most important report for the rest of the year, right? So we're kind of getting ready for that. But in between, we've got this week where we can kind of pay attention to outside markets. We've been liking to do that lately. And outside markets are very mixed, to say the least, because on one hand, you've got stocks under quite a bit of pressure. The dollar's rebounding. And those are kind of negative things for the grains and sort of risk off. But also, you've got a lot of strength happening in the crude oil market. And that's coming from the OPEC's decision, OPEC Plus's decision to scale back production by 2 million barrel. And that has a bearing on corn and beans in particular, corn and soybean oil in particular, from an energy perspective. So you have sort of you have a week where you're in between 2 major fundamental inputs, and you have a week where you've got outside forces kind of going in opposite directions. Again, negativity from the dollar and the stock market, but positivity coming from energies, which is made for very choppy sort of 2-sided trade. And if you look at corn, it's been almost a month and a half, really approaching 2 months of a pretty tight trade range at the higher end of the recent range, right? We kind of rallied off of those June, July lows. We got up between $6.60 and $7. We've tried $7 3 times. We've tried $6.60 4 times. We've not been able to break out or down, and we're just kind of ping-ponging between those 2 numbers right now, basically directly in the middle of that. And not surprising that we're going to set up right in the middle of this range, heading into that report probably on Wednesday. Keep in mind, Monday's sort of a pseudo holiday. Markets are open, but it is a bank holiday, which can be weird and wonky. But I don't really anticipate any big moves between now and that report, so we're set up right in the middle, and we'll see where we go. Now, beans a little different story. We've been under pressure. The river has the river issues, the barge issues, getting product to port has had a bigger impact on soybeans in the shorter run than it has for corn, and that's been weighing on us. Also, that bigger beginning stocks number last Friday, obviously we were down very, very sharply. So a little bit of a negative look on that bean chart for the moment, but Friday came back really well. Took all of Thursday's losses back. So again, there too, we're just sort of set up in no man's land going into the report, and this report is really going to set the tone here between now and basically the end of the calendar year.
Very, very true, Ted. Very true. All right, you're a crude oil guy. You follow that market very closely. Talk to me a little more about this OPEC Plus decision we saw earlier this week, and just the impact on the commodities and the broader market in general. What are your thoughts on this? I know there's some chatter that the U.S. government's looking to, kind of battle with OPEC here over this. I mean, it just feels like there's a lot swirling around this and a lot that could be on the line when it comes to the markets.
Yeah, we're gonna battle. We're gonna battle OPEC Plus with our new friends, Venezuela. Yeah. Here's the thing, Jesse. OPEC Plus made this decision because they wanted prices to go higher, and to this point, prices have gone higher to the tune of about $15. It started with the hurricane. Before we knew where it was going to hit landfall. We were worried that it was going to, head into and take out some of the rigs a little bit further west. That didn't happen. But we started the rally going into that hurricane, and then the OPEC Plus decision extended it. They got what they wanted. Now, that being said, will they actually cut that production now that prices are higher? It's very enticing to produce more when prices are higher. I mean, that's kind of the whole point of higher prices, right? So I don't know. OPEC a lot of times in the past has given us things like this, has said things like this, and then done something completely different. In a lot of ways, you can kind of make parallels to, Chinese policy for that matter. So we'll see. We're going to have to just keep an eye on it and see what they do. But what I will say is when you have a market that's worried about demand, which is very much so, the crude oil market, obviously the supply situation has been bullish for a while. But we're worried about failing demand or faltering demand. Well, the worst thing you can do for something like that is to increase prices, right? And so just like releasing the SPRs, the strategic petroleum reserves, right?
Mhm.
Just how that didn't quite have the effect, certainly at least not immediately, it didn't quite have the effect on the market that we'd been hoping for, the administration was hoping for by pushing prices down sharply. I don't know if this is ultimately going to have the same effect because you do have that demand destruction that occurs when you have a $15 rally in crude oil. And we're getting into a time frame a year where unleaded demand becomes very questionable anyways. And I'm going to argue that driving has become a lot more discretionary than it was a couple of years ago because now a lot of us are working from home, as you can see.
Same.
Not all the time, but it's Friday and we're putting more emphasis on quality of life. That is one of the biggest takeaways, and I'm going off on a tangent, but it's one of the biggest takeaways that we had from the whole COVID debacle.
Sure.
Is that we ended up putting a lot more value on quality of life. And so a lot of people figured out, hey, I can be just as effective from home. And employers figured that out too. And they're allowing that. So whether I drive down to the office or not on a Friday really kind of depends on what my prerogative is. And personally, I mean, if we have a report on a Friday, like we did last Friday, I'm in the office. I'm in the office on report days. That's just my strategy or my plan.
Mm-hmm.
But on a day like today, I'm gonna work from home because my commute home is like 2 hours on a Friday, and I don't want that. That's quality of life. So, like I said, the point being, driving for a lot of us has become a lot more discretionary. And if you raise prices at the pump again, if they start going back up, and we get into some cooler weather where you don't necessarily want to drive on that anyways, and we're not taking the vacations, then we're going to be a lot more sensitive or elastic. Demand is going to be a lot more sensitive or elastic to higher prices than it was midsummer. That's my point, or that's my argument, anyways. So I don't see this as being a long-term rally in crude oil. I think the $15 that we rallied, and that really capped off with some pretty major strength on Friday, I think that's about coming to the end. I really do think that ultimately by the end of the calendar year, crude's going to be challenging or maybe even making new lows again.
Ted Seifried was Interag Hedge, our guest today here on Market Talk. Ted, earlier you mentioned the river, the issues with the Mississippi River. I know that's been a big story in the trade here this week with those low water levels. And it seems like it's really impacting basis. It's impacting that cash market along the river. What are you hearing as you talk to end users and grain merchants and whatnot along the river? I mean, just what are the thoughts of this situation and how it's impacting basis right now?
The funny thing about that, Jesse, is I hesitate to say that the good thing is that we're not seeing a tremendous amount of export demand right now. And you can argue that one of the reasons why we're not seeing a tremendous amount of export demand right now is because of the what the basis is of the Gulf, right? And also to strengthen the dollar. So those three things together are all very well tied in. But because our export sales aren't really off the charts every week, I think that's keeping it from getting wild and crazy. That being said, it doesn't look like there's any relief in sight for the Mississippi River as far as, any big rains and replenishing and seeing river levels increase once again to really free up a lot of that traffic and widen those lanes, those shipping lanes, the barge lanes again. So I don't see this problem going away. And if we were to start picking up some export sales fairly aggressively, then you would think that basis can go pretty wild. Now, on the other hand, if we continue to stay well below normal, especially on corn, from our export sales, maybe that basis cools off. But I say maybe because if prices are also cooling off, that might keep the basis fairly strong. So look, it's going to be a positive influence on basis until that problem is resolved. And we don't know when that problem is going to be resolved because for right now, it's just not in the forecast.
Yeah, a lot of things to watch there with that situation. Another situation that we're, of course, still talking about, the Russia-Ukraine war, the wheat market. I know that's had an impact on the wheat market this week and Friday as well, although we did back off the highs. But this talk of Putin maybe using tactical nukes and just all of this situation just seems like it's getting worse.
Yeah.
And it seems to be giving us a little bit of a chance to put some premium, some of that quote unquote war premium back in the wheat market. But yet this wheat market also the last couple of weeks felt like it's kind of been a stair step up and down, back and forth, just kind of go up a little bit, come down, go up a little more, come down. So what are your thoughts on wheat right now, Ted?
Yeah, I mean, look, of the wheat chart has looked fairly bullish for a while. And then we got the report last Friday with the production number coming in sharply below expectations, massive revision lower. And, we really spiked on that, but we couldn't really hold the strength. In fact, we closed higher on the day, but well off the highs. We were above the 200-day moving average, but we couldn't hold it, and we ended up closing below it. And this week we've really retreated off of it. And now we're really challenging the short-term uptrend line that we really need to hold to keep that chart together. And we just can't seem to really pick itself off the mat. That's in spite of the idea that we're going to see, I think, one of the tightest domestic carryovers that we've seen in wheat for quite some time on next week's report. You've got a lot of bullish factors kind of happening in the wheat market, but we're not really following through to the upside. And that's a big concern. You can say that a big reason for that might be the continued strength in the dollar. When the dollar midweek kind of turned around off of its corrective, it pulled back and started moving higher once again, it really, really affected the wheat market. Wheat is such a global commodity. There's a lot of places you can source wheat from. When that dollar is really strong and continuing to strengthen, it really doesn't bode well for our export business. So it seems that the trade's maybe comfortable with 520 to 560 million bushel carryover is kind of where I'm thinking we're going to see it next Wednesday. And feeling like we're adequately priced for that because we're not having to price ration exports. We're just not seeing this huge influx of exports. Now, if we were to see that, that would give us a whole lot more reason to see wheat prices go higher and maybe sharply higher because then we would be in a position to price ration. But until that happens, I don't know. Maybe wheat's just comfortable trading these current levels. And then a lot of it's going to kind of depend on what happens with row crops, specifically corn, too.
Sure. A lot of things to look at there. And I know, ongoing planting right now, Southern Plains, it's dry down there. That's another issue to think about. And then just watching what happens South America wise. I know we're going to be turning our attention to South America's growing season here. If we haven't already, we're going to be turning our eyes and ears there pretty quickly. And that's going to be a big impact on our ag commodities moving forward for a few months.
Yeah, absolutely. I mean, right now the focus is the report that we get on Wednesday. But once we get that out of the way, we'll look at two things. We'll look at the weekly export sales numbers because we want to gauge. That's our quick and dirty way to gauge demand. And then, like you said, South American weather, right? I mean, they have all the intentions of planting some massive, massive crops. We know Argentina is dry currently, so that's slowing down their corn planting, maybe pushing them more to beans a little bit. But Brazil intends to have Conan numbers that we saw midweek are just, wow, massive. And if their weather's going well. If they get, first of all, they have to get planted. If planting goes well and their weather's looking good, I don't see how that's not a major problem for markets as far as, from a price perspective. Um, we've been going the last few years talking about short supply situations. Well, Brazil might be able to fix that in one growing season, and that's a big concern. So we will watch that weather very closely. We will watch our demand in any way we can, but really the best way, the quick and easy way to do that is to watch exports.
Ted, as well, let's talk the livestock trade. Fairly quiet day on Friday. I know weekly export sales were good for pork on Thursday. Beef was so-so, but it feels like watching this cattle and hog market both has been interesting for a few different reasons in each. What's your thought in this overall protein sector as we wrap up the week?
Yep. About mid-September, you had a fund liquidation party,
Yeah.
basically. They wanted out, right? And we were precipitously lower over the course of 2 weeks or so. To this point, it seems like, for the most part, that cleansing has been accomplished. It's done. You had that massive reversal lower midweek in hogs. I think that was sort of the last hurrah of that. But now we're back to, let's trade the actual fundamentals. And for cattle, you kind of feel, by the way it's trading, that maybe we're adequately priced for now. Yeah, we had higher cash, but then we're also looking at the deferred months saying, wow, this stock market continues to be under pressure. We're worried about box beef prices over time. We're worried about domestic demand. We're worried about people wanting to look for cheaper forms of protein, possibly pork. So you're kind of stuck in the mud right now in cattle, even though a little higher cash, but also lower stock market, kind of conflicting, offsetting factors to some extent. There's some movement in the spreads, but for the most part, you look at the December cattle contract, it's traded mostly sideways. Hogs also traded mostly sideways this week, however, in a very large range, unlike cattle. And I think the hog market is different than the cattle market in the sense that I think we got way too cheap. A lot of that was based on the fear that, or the fear, the realization or the announcement that China is going to be dumping a lot of their domestic stocks into their public. And we're thinking, okay, well, we're not going to get a whole lot in the way of exports to China. This is going to cool off our demand a bit. But it didn't, right? And cash didn't really do the same thing as the futures did. Cash is trading at a massive premium to the futures market. And that drop off in export sales, as you said, didn't happen. We had really rather good sales this week and last week, and really it just never did fall off. And I guess most importantly, China was in for a little over 10,000 metric tons this last week. So despite releasing their stocks, China is buying, maybe replenishing those stocks. And that's good news. I'm also going to say the really high prices of soybean meal over in China right now, I don't think our pork exports to China are going away anytime soon. So I'm looking for a recovery in the hog market. I don't think we're in a value range. Like I said, I think we might be in cattle. I think the value range for hogs is probably somewhere between 80 and 83. So it's not a massive bounce from where we're at. But I do think that we get back, pick ourselves up off the mat. I think this week and the volatility we saw in this week is maybe indicative of a near-term bottom. I think we can bounce from here. I'm looking for some higher prices. I don't know about new highs. I think we've got a lot of concerns about economy as a whole. That might keep us from really getting too excited. But I think we've gotten too cheap on hogs. And as erratic and wild as this week has been, again, to me it feels like a near-term bottom.
Well, Ted, final thoughts, the infamous open-ended question for you here before we wrap it up real quick. Anything else you want to share with us today?
Yeah, Jesse, I think we covered a whole lot of bases. I'm going to say this, a couple just quick notes. I think the river issue is ultimately a bigger deal than the market's making out right now. I'm very worried about our exports, and corn in particular. Yeah, we got a lot of time in the marketing year to see that pick up. But it seems to me that global end users are really dragging their feet to see what's going to go on in South America. And if it looks like Brazil's going to have a big corn crop first and second season, they might try to skip us as much as possible. I'm worried about that. And the reason for that isn't necessarily because people don't like us. It's because of the strength in that dollar. So the dollar, the slow exports that we're seeing right now, that is a concern of mine going forward. I've never really been a supply bear. I'm a bit of a demand bear. I'm worried about the economy as a whole. Crude oil, we talked a lot about that. but I'm very curious to see what happens from here. I kind of think Friday was a sell on crude oil, but if not, if crude keeps going higher, that'll be a positive influence on grain. So you have a lot of very conflicting things going on, which is why you have these choppy markets. But my main point is that if I'm a producer, I'm a lot more worried about the downside right now or this year than I was last year. So I think we have to be taking a different strategy with markets right now into this harvest than what we were doing last year during harvest. And that is protecting the downside one way or the other. I don't mind re-owning upside potential. I'm not really doing jumping jacks about that and screaming on top of the mountain like I was last year. But I think risk management is absolutely paramount, because the worst thing that could happen here, Jesse, is we pay big input costs and then we don't get the output costs. There's a setup for us to be wildly negative on our pricing, on our profit margins, and we got to make sure we don't have that happen. And there's just too much risk in these outside markets, in the macroeconomics of things, that you can't just be complacent. Store and ignore is not a good idea, is my point.
Yeah, definitely. Well, Ted, if producers want some advice on what they're doing with their marketing, I know they can reach out to you and the team there at Zaner. How can they get a hold of you?
Yeah, you can reach me directly at 312-277-0113. You can find us on the web at www.zaner.com. You can read a bit about us. You can sign up for our morning Ag Hedge newsletter, which is just a newsletter, not recommendations, just talking about news. Recommendations come from us. So if you want recommendations, just call us. And we're also doing a My Farm View thing, which is, it really kind of gives you overall bookkeeping. It's a really interesting way of looking at your farm from a marketing perspective on the different tools that you are using and can use, and so on and so forth. And aside from that, you can find me on Twitter at the Ted Spread. Yeah, it's kind of my fun area. So yeah, it's that's me.
Cars, ethanol, hot
Yeah.
dogs, you
Right.
name it. Tons of stuff on Ted's Twitter. With that, Ted Seifried, Zaner Ag Hedge, always a pleasure, buddy. Thanks for joining us. Have a great weekend. We'll talk to you again real soon.
Absolutely, Jesse. Thanks for having me. It's always a pleasure. You have a great weekend too, man.
That is Ted Seifried with Zaner Ag Hedge. That's Market Talk for today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.